Hello and welcome to ESG Talk, your go-to source for insights and advice from leaders in environment, social, and governance. I'm your host, Mandi McReynolds. Today, we're discussing the growing importance of internal audit to manage ESG risk and, of course, reporting. I am so excited that we have Anthony Pugliese. He is the president and CEO of the Institute of Internal Auditors, an international professional association that is the leader in standards, certification, education, research, and technical guidance throughout the world. We thought it was great timing to invite Anthony to the show because they are having an upcoming Sustainable Audit Risk and Assurance virtual conference in June that our team is going to be helping, including myself, give a keynote on the topic of ESG. Please join me in welcoming Anthony to the show. Hello, Anthony, and thank you so much for joining us on the show.
My pleasure. Thank you, Mandi. Thank you for the invite.
Well, you have had quite the busy year already. In January, the Institute of Internal Auditors released a new global internal audit standard, which is a guide for worldwide professionals practicing of internal audit. And we think that's going to be really key for the ESG Talk audiences. Over 140 countries tune in week after week. And so we want to start there. Why did the organization update its standards, and how do they improve corporate governance and risk management in today's evolving global risk environment?
Yeah, great question is why did we even do this, right? We had a historical practice of kind of taking our international professional practices framework and updating it. So every 3 to 5 years we'd look at it and what has changed in the business environment, we'd consider changes on the standards. But when we started to look at it a little over 3 years ago, we heard from our members that they felt the standards were not keeping up with the rate of change in the marketplace, which probably has been that way for many years, but particularly with cyber changing and AI and ESG, among so many other topics that are important. I could keep going with that list. They wanted something that was a little bit more flexible and also had some, I'll call them sort of ground rules as far as what internal auditors should be considering in the new business environment we find ourselves in. So we had a series of calls with members to try to pinpoint exactly what it was that we needed to do to make these more user-friendly, more current, more topical. And we got a lot of great feedback. So we started the process of updating the standards, like I said, a little over 3 years ago. And we also put into place a whole new process for how we wanted our members to look at the standards. So we have more of a due process on how the standards are put out for feedback and then taken back in. So it's been a real iterative process. It included a lot of stakeholders as well as our own members and other internal auditors. So a long process. They're effective January of next year. They were issued in January of this year. So we have a 1-year implementation cycle for it. So that's a high level background. I could keep going more on some of the changes. Like you mentioned, risk management, governance overall. The new standards really define the expectation that internal auditors really have communications. The CAE, the Chief Audit Executive, have communications with the board and the audit committee is appropriate to help them understand the kinds of risks that they're seeing in the business and to make sure the board is appropriately focused on the right risks in the business. And that's an iterative process. The board works with internal audit, defines it with them, and back and forth. I don't see how it really ever stops in the environment we're in right now. Things like ESG are just changing so rapidly that the risks by default are going to start changing as well, even on the same exact topic as we looked at the year before. So we really have asked our internal audit standard users to really amp up the communications with the board. In some cases where we've heard that our members didn't have access to the board, we've also asked that they document, the efforts that they took to try to communicate with the board and help them understand what the internal auditor was seeing as far as material risks in the business. And there are many. That's a long answer.
All good. Well, and I appreciate that you were describing to the iterative process, the stakeholder engagement, to really take the time to make sure it's holistic and dealing with the dynamic nature of the environment we're in today. Let's dig a little bit deeper. As I understand, there are new topical requirements and guidance to help the internal audit functions focus on key areas of risk, such as ESG and sustainability. And as somebody who just has finished and wrapped up and was looking at our internal audit report this morning for sustainability, I'm really curious. Can you give us a little more detail on how the new standards are going to help organizations like ourselves and those listening on today's podcast, how they're going to address complex ESG landscape that we're in today?
Sure. So the idea of topical requirements is it falls under, if you've studied our new standards, it's domain 5, which is performing internal audit services. And the standard hits it at a high level, but topical requirements take the principles of domain 5 and apply it toward any given subject matter. So, for example, the first one has been released for exposure, which is cybersecurity. And it's a desire for us to have a level of consistency across all the members in the 118 countries that are a part of the IIA Federation. So our objective would be not to redo work on any given area. Like when we issue a topical requirement on ESG, well, first of all, we'll probably hit the E more than the S and the G, or the sustainability part of it. We're not trying to reinvent frameworks or try to define things in a different way than it's been before, but really to make sure members are thinking about it in the same way. So, for example, in the case of ESG, you would want to understand, what framework are you using? What standards are you using? Why are you picking that framework? Why are you picking those standards? And what is the implementation period? What's all that going to be like? And how do we make sure, again, the level of consistency? If I pick up a report and I'm in South Africa, or I'm in the United States, or I'm in Spain, three random places, that how do I have a good feeling that the internal audit work done there was consistent and had the same level of rigor? And think of a document that's more in the length of 10 to 15 pages, not a novel on standards, but it would ask the internal auditor to kind of document some of the things I just mentioned. How did you come to that conclusion? Have you told the board? Have you told management? Have you worked with the compliance team? All those things, so that we do have that magic consistency. So for ESG, that's currently under development. We hope to get something out by the end of the year, but our first pass was on cyber.
Well, I love that piece of the domain guidance, because I do think that's the value of an internal audit team coming in, and even our own team. We went through this just a couple weeks ago, where again we're looking at more the frameworks, the standards, the governance, the components, and as organizations have this collide between voluntary and regulatory, and listeners have heard me say this over and over again, it's playing out like tax. You're going to have global tax, and there's going to be disagreement across countries and across other components. And it's great for an external or an independent team to come in and ask you some of those questions on governance, and inviting it in, because I think that's going to help you sort through how the decision making on voluntary transitions to the decision making on regulatory. That could be different across other organizations, and unpack some things that you may want to consider. As we look at some of the other pieces with the ESG landscape, we finally have the SEC newly issued climate change disclosure rule. What do you make of the final rule, and how do you see it as being evolved from the draft that came out in March 2022?
Well, overall on sustainability reporting, I'm a person that, in the United States, as you probably well know, this has become a very partisan oriented issue. Depending on what side of the aisle you stand on, you may have different beliefs about it. But for me, I prefer to look at it as it's a market driven reporting framework, right? Investors want to know. Where we were before, at least for publicly traded companies, was a bit of a hodgepodge. It did not have the consistency we see coming out of reports issued, say, in Europe under the European Commission requirements. So there was a gap for me as an investor and a market driven person to think, how are we going to do this in a consistent way across this country's framework? So I applaud the SEC for trying to bring transparency to this and consistency. And I do think, again, it does protect shareholder wealth, investor value, because without these requirements, again, you back to even within an industry, finding a hodgepodge of reporting. And I do think the SEC was very cognizant of the feedback they had from the initial rule, and they backed down a little bit on how quick this all went. And also on things like the Scope 3 greenhouse gas emissions that they backed off a little bit on, which is a very complex topic, right? A company's value chain emissions is not something we're going to see many companies able to jump into right away. So the financial statement disclosures are a little bit less intensive as well than the original draft, and there'll be more time to registrants to actually get through all this and make sure the related assurance requirements are hit as well. So I think they came to a good landing spot on the standard versus what was originally exposed. And I think it will bring a tremendous amount of value, although I completely understand it's going to have a lot of growing pains attached to it. Although we find that most listed companies in the US are already putting out more than the SEC requires. So now we can look at it and kind of reframe it as, okay, maybe they're already there on the work that has to be done, but now we have a level of consistency across all publicly traded companies. And I think that will accelerate over time as we get more and more used to this. So I don't really know what organizations are doing now before the requirement goes into effect in terms of how they collect data, how they make sure they have the right data, what kind of assertions they're making around climate risk and which ones are material to them, which ones aren't. All that's going to be new. And I'm looking forward to helping our members with the implementation of the requirements. And we've been lucky enough to work a little bit with the SEC on that and bring awareness of what internal auditors do. But I think generally speaking, it's a little bit easier to implement than we first thought it would be. And I think our members and internal auditors in general are going to have, it's really not too different from financial statement work because you've got, here's requirements and here's the data that backs it up. It's just new insofar as having to identify the right controls and to make sure management has thought about the controls and the risk and the board has thought about it. Again, I'm happy to see the standards out there and we stand ready to help with implementation, knowing that internal audit is such a critical part of this being a success.
Well, and I think it's a really good call out for those listening in. Oftentimes, there's such power with the IIA and other associations where engaging in the stakeholder engagement process, engaging in the feedback, ultimately can help shape some of the policies and implementations of the law. And oftentimes, practitioners can say, oh, I'm getting lost in like all of the ways that this is going to impact my work. And my number one question back to them is then what associations are you working with to help shape the future of your work? And so it's a good call out to make sure that organizations and companies, as they look at IIA, think about how can they be a part of shaping the future of the profession. I'm curious, as you see the new ruling and existing sustainability frameworks, do you see them as there some connectivity to them? Or do you see that the internal audits are going to have to go a little bit deeper over controls of frameworks and the data, especially as you see it, the difference between regulation and you see the difference between voluntary?
Yeah, I think there'll be a more extensive look at the controls. Everything sort of shifts whenever you say something is now required on a regulatory basis. And I think I would have to understand by industry where it's going to be more impactful, the changes from what's being done now. But I would imagine that, however that pans out, internal audit's going to be in the middle of it to make sure that things are being looked at in the proper way from a perspective of governance, risk management, and just the internal controls themselves that have been identified as it relates to sustainability reporting. And again, I think even though it's going to be harder, more technical knowledge needed for this by internal auditors and the organizations they work for, I do think it's something that's ideally suited for our profession. The first time we're actually reporting on non-financial requirements in a way that we haven't done in the past. And the regulation gives us the framework to help do that. So it's an exciting time, but I do think internal auditors are going to be challenged at the beginning, as any profession will be, to dive in and understand what this means.
Yeah, and I think there's also this difference between financial materiality and emissions materiality, right? That has to be a little bit reconciled. So even those who have gone through a level of verification or audit, there is the emissions materiality side of it, which is different from the financial materiality side of it. And so as internal auditors and teams work together, it's kind of this new language. And I'll just even use our own team as an example, making this real practical for our listeners, right? Our internal audit team wasn't aware of like the EPA factors changing, right? Not wrong. Why in the world would an internal auditor ever know that, right? And so then it was this debate over, okay, do we already have our internal audit stuff from last year's data? Do we stick to that and then release our report later, which would then have old EPA factors, or do we start all over because EPA released factors in the middle? Right? But a debate between the two teams on like, hey, what's going to be like our scope of work lining between the two teams? And then how does that play out when you're looking at regulatory standards or submission to the SEC in the future or some of those pieces? So I do think it's going to require a new opportunity for both teams to ensure their skill set. And same with our team and controls, right? So what happens if the EPA releases their data late? How does that impact controls? Because now all of a sudden you have to turn around controls that you may not have had enough time to turn around and do before you head into an audit, which has now been exited. Yeah. So I think there's a lot there that the two teams are going to learn from one another and have some learning. So I would be remiss if we didn't then touch on how are they going to do this moving forward with innovation and technology and opportunities to increase accuracy. Where do you see technology and structure playing a role in guiding these two teams through the complex years to come?
Yeah, it obviously depends on industry, but technology is going to be more than key to how all this works. It's going to be very critical. And having systems that can capture the kind of data that probably are historically oriented toward financial statement disclosures and capturing all the requirements for that. There's a lot of products on the market to help with all of this. I think technology also can play a great role in the analyzing of the data. For example, data analytics. If you were looking at a certain data set and you wanted to understand, let's say it's extremely voluminous, how do you examine that in a way that makes sense? And using data analytics would make it a lot more efficient and easier and can help spot things that you may not notice otherwise. So there's all the systems to capture the data and to back up the internal control. That's one side of it. But then using tools to analyze the data and trying to find trends or any evidence of something not working the way it's intended, or even something working particularly well. I think technology is going to be key. It really will be. And again, some industries are going to be harder hit by that. But you think healthcare, you think manufacturing, just voluminous amounts of data and choosing the right controls, et cetera. So a big role, a big role. And I think that market's probably going to grow pretty quickly in terms of tools to help analyze all this.
What do you think, as we look at that generative AI and tools like that, how do you think it's going to play a role in audit and risk management to reduce cost and complexity of compliance?
It's one of the things, and this may be a very low level example of how great generative AI can be in this space, but we've noticed from our members, and actually I've done this many times before stepping on a stage to talk about something that I may not be completely in the know on, using ChatGPT to simply say, I'm auditing a healthcare organization of the following size, blah, blah, blah. Give me a list of controls that I should be looking for. Because it's such a new area, it actually is amazing how much the ChatGPT tool can actually identify those controls that you should be looking for. And they're not meant to be all inclusive, but for something like this, it's a starting point. And for many of our members who've never done this kind of work, a starting point is golden. You have something to begin looking at, informing, and asking questions around. So it's the simplest use of generative AI to refine that, and then over time to see the generative AI technology start to get more and more refined, so that you have even a better starting point if you move into future years. It's a big role. Now it's going to be interesting to see how all that plays out, but we can even see models that are oriented toward AI training itself on the disclosures or the issues that would be relevant in a certain industry, and then offering those tools to internal auditors or any other profession that needs to use them. So a big role, and it's going to continue to evolve. And I'm only hitting at the most obvious examples, I think, in this call.
Well, I think it's interesting too, like, and full disclosure, as a parent, I'm helping my daughter with her geometry homework last night, and I plugged into ChatGPT. Explain this to me like I'm 5. So, it's one of those things where you use a professional example, but we're starting to see this personal use, and I think as auditors, risk and sustainability professionals, it's going to start to revolutionize all the different ways we can use AI. A great example from our team is taking kind of the language development AI that we have at Workiva and looking at it and saying, okay, last year's transition plan, already audited, already looked at by legal and compliance. Take our climate transition plan, synthesize it into high-level report, and now all of a sudden you've got that capture of a paragraph and something that's already been audited, legal, reviewed. You're giving it a high-level review, and you're saving that time to then add what's the new piece, or taking that same data and saying, okay, how would I summarize this for a board, right? Your example of more communication, quick communication, faster communication with a board. You don't want to have to waste all that time when it's like something can kind of synthesize for you. So I agree. I think we're only at the start. And then I think everyone that uses it personally are going to find unique and fun ways that it can transfer.
Yeah, and even hopefully the SEC will have available through the Edgar reporting platform, but something about using AI to understand the thousands of filers that are going to be putting information into the system, and what are their disclosures like? How could they be improved? What's the similarities? Where do they get into issues in the future? Maybe if you see the SEC coming back and asking for changes or restatements of information, which hopefully that won't happen a lot, and there'll be a little bit of grace as this is rolled out across the country, but I do think even analyzing the reporting itself that comes in from registrants will be very, very important, whether you're within one industry vertical or maybe organizations of the same size. But they'll be interesting. It's certainly, think about organizations that aren't even located in the US but are registered on the exchange. There's a lot of complexity that you can start thinking of how AI could be used successfully. So we'll see.
Well, technology is only as useful as the collaboration among humans. And I'm curious from your perspective, how are you seeing the collaborative approach between ESG, finance, and audit teams playing out as they're seeking more robust, data-driven programs together?
I think it may be a virtue of being put under the accounting team. In a lot of organizations, you see sustainability reporting rolling up into the CFO kind of structure. There's a lot of collaboration that we're seeing, and I think an acknowledgement that this is new for a lot of organizations. So I think the level of collaboration is where it needs to be, and I think having a rule required, coming out from the SEC, is going to drive that collaboration even more. And I hate to say this, but as organizations get into trouble by maybe not understanding what their disclosures mean, or they probably don't have enough of the disclosures, I think that's going to excite people enough to understand that collaboration is utterly key. And again, getting it right the very first year is probably not going to happen for most organizations unless you've been doing it a really long time and all this rule does is clarify. But I think it's going to be a learning curve, and I think collaboration is going to be key to understanding all the iterations of that learning curve. Whether it's finance team or one of the operations teams in an organization that starts to look at data differently and as a result of the requirement. So I think it's going to be key. I think it's been that way for a number of topics actually over the last 5 to 10 years. You've got ESG hitting most of the world except for the US, but also other topics like cyber is another big thing that's required many teams to collaborate on successfully because nobody wants a cyber attack. We notice it on IT governance. We're noticing it on a number of topical areas where, in the past, accounting owns that, right? Accounting owns all this data, it's numbers, it's not something we need to be worried about other than to follow internal controls. But now I think it's just a lot different. So a lot of collaboration. And if I look around the world outside of the United States or the organizations I've seen, tremendous amount of collaboration. And that's encouraging. And I also see internal audit being used as a resource and not in that capacity of tell us everything we've done wrong, but help us understand in advance what we need to do right. And that's resulted in tremendous support for the organization. And I also include the board and or audit committee in that equation of who to collaborate with. You've got the inter-organizational departments, but collaborating with that group is key. That they understand the risk and they're focused on how material it could be. So a lot, and I'm sure it can improve. But right now we're seeing the kind that should be there. Hopefully you are as well when you're out there looking at these topics.
Well, Anthony, thank you so much for joining us today and providing a valuable global perspective on the movement as it relates to internal audit and as teams work together to create progress through the complexity ahead. So we thank you for your time and just sharing your insights with us today.
Thank you.
Thank you for joining this episode of ESG Talk, brought to you by Workiva, the world's only unified platform for financial reporting, ESG, audit, and risk. If you're interested in learning more about internal audit, I recommend revisiting our Season 2 episode, Navigating Audits and Controls in ESG Reporting, featuring Diana Traynor from Deloitte. In the meantime, if you enjoyed this episode, please rate and review us on Apple Podcasts and subscribe to see future episodes on Apple, Spotify, or YouTube. We'll talk soon.